So I'll go I realize that most people are probably going to lunch or they are at lunch. So for those who are here, I'm going to go through the futures really fast, take a look over here, see what's going on in the market. We're up 113 points. And I would think that the first thing, you know, is that some people probably found themselves thinking, what in the hell, man? This is a rally, right? From outer space. It really feels that way, like we're headed to the moon here. Um, can we go back? Can we identify? You have a good question. Julie says, I need help to be on the right side. How do you do that? First of all, Julie, I think you just like in the morning, you take the process, right? You break out of the PMZ, and as I've always said, don't marry the idea, and then you find yourself on the right side of the trade. Usually, though, what's going to happen is most people, Julie, are going to take their profits off way before. Not many people that I'm aware of can just sit here and hold and hold and hold because they come in just like you do, Julie. Like they come in, they think, hey, there's a supply zone up there. Hey, there's resistance, or somebody has a reason why they feel like their technical analysis is going to, tell them. And I keep telling you guys that I'm kind of getting to the point where it's fun to talk about the reward or the points that we could see. But what's most important is the risk. That's what's most important. So, like, even this morning, you brought up a good point, Julie. It was like, I didn't really want to get long because I felt like supply was right up there, right? And I answered you and I gave you some of my insight. I thought that the supply zone was actually quite far away and it was definitely worth the risk to reward if you were going long. But we can't really know if the supply zone is going to work. We really don't know if demand is going to work, all of that stuff. The only thing we know is if you get stopped out, this is how much money you're going to lose, right? Now, a lot of times Mel and I are able to give you like awesome targets and levels and they work really well, but sometimes they just blow right through them, kind of like today. But let's dive a little bit deeper and see if there was anything that was telling us that potentially that the market wanted to move up. You know, 2 weeks ago, we came into, or last week, we came into my demand zone that I had here. Now, I'm be honest with you, this is not a beautiful demand zone. This is not something that's so powerful that I would expect to be at all time highs. But we did end Friday right around the 618, and I talked about that in the BMA. And then I said, if we get over the 618, I'd like to see 2 days above it. Well, didn't matter. 2 days is already almost the all time high, meaning it's only been about 6 or 7 hours and it's almost the all time high. These things happen. But one thing that we do know is that we were above the 618. And when we are above the 618, we understand that the market has broken that downtrend. And then we look for the 88.7. This is a pretty amazing move, not gonna lie. But the other thing to think about is we have been in consolidation or sideways action in a very bullish market. I've also said that many times. So the overall trend, as far as trendy methodology is concerned, is that it was extremely bullish for the year. And this has not changed, folks. This green label right here has not changed. So what's happening is we're seeing people buy the dip finally. The POTUS came out with maybe some good news about the war, and people are liking it, so they're at least pushing it up here to the highs. Okay. Now, in hindsight, it looks easy, but it's not easy, right? And as we get to smaller time frames, we take a look here, right? All I'm doing is basically using the 618 and the 88.7 in this area. You can see on the daily, we're very, very close to coming up here and smacking the high. I have had to hold back plenty of times this morning to keep myself from jumping back into the ES minis because I took $137 on a long and then got out. And obviously, if I would have held this thing, I think I'd be up about 60 points right now or about $3,000. So, yeah, I missed out on this opportunity, probably like a lot of people, right? At least from a futures perspective. But one thing that I am happy about is I hit my daily goal, right? I hit my daily goal. I'm up several $1,000s right now due to other things. Nvidia is doing its thing. Tesla's having a good day. RDW, I was able to take a trim. Like that's all fun, right? But what are we going to do now, right? What are we going to do now that we're coming up to an all-time high? One thing that you could do is come over and check the next time frame. Okay. There's your daily again. This is, let's go back here. Let's look at the 4 hour, 113 points. Wow, that's beautiful. Now, I actually took some SPX debit calls that I already cashed out. I took those this morning as well. Um, again, that was probably like 30 points ago. Could have made even more money. It's all good. But this is what the 4 hour looks like, and we are getting pretty extended from this 9 EMA. One thing that I want to tell you is that it's not about if, it's when. Prices always seem to resort back to the 9 EMA, but also into what we call imbalance. The 4 hour has created a beautiful inside and up formation, everyone. Also, an imbalance candle. So, this is a zone right here, right now. I don't want you to forget about it. We will come back to this area 80%. I'll say 80%, but I don't know when. But here's the thing that's beautiful about supply and demand. You now know where that zone is, and you should be ready to execute it when price gets there. Does everybody understand that? This is the edge that we have in supply and demand. It's identifying these levels and then allowing yourself to be patient enough, create an alert, single, at or below. And let's talk about what happens during these times. People will miss out on this opportunity, and a lot of people will chase. They'll just start getting frustrated and they'll chase, and sometimes you get lucky. Like if you would have chased this, you would actually got pretty lucky today if you didn't put a hard stop in, and you'd be making money and you'd be really happy right now, right? But sometimes what happens is when you chase and you get up here towards the all-time high, technically everyone's looking at the same thing, and then the market will start to fade. And what happens is there's an imbalance. There's people that miss this opportunity. And believe it or not, there's institutions that miss this opportunity. There's big money that miss this opportunity. And what you want to do is you want to align yourself with the bigger volume where people were willing to buy. So bigger money comes in, and instead of chasing, they're going to place orders, or maybe perhaps the bigger money that did get in didn't get all of their orders filled. So they're going to sit down here. Okay. So once price comes back down here, now we have an option to try and get long at or around this area. Okay. So that's the first thing. The second thing is, what about supply, right? We busted through a couple levels. I think me and Mel had basically the same idea this morning. We pushed through that level, but we're not through here. Just to be clear, this is the part where sometimes you think that supply is broken down, and really right here is supply, right in this area. Okay. And that was around that 13, 12 area. We pushed up through there. It's not liquidated. So price could still start pushing, make an all-time high, really catch everybody off. All your traders who like to trade breakouts start to get long right over this level, and they're looking for a big breakout. And if this fades, look at the distance between, or the divergence between price and down here at the 9 EMA. Now, you've been doing this long enough, many of you, to know that we on a 4 hour don't stay that far above the EMA cloud for that long before it decides to come back. Some of the things that we can look at to determine whether or not this will continue is we're going to come over here and look at the NASDAQ futures. And this is where some of the way that I analyze things are going to really help you out. They're unconventional, they're different. You got to get some time in the seat and understand how things move. Like a lot of people would say, "Oh, this is just too much." Right? There's no way this is sustainable. Now let's look at its brothers and sisters and see what they got going on. Because just because the ES futures looks extended, perhaps NASDAQ has a lot further to go before it even runs into supply. What we want to see, everybody, is we want to see symmetry or synergy. We want to see synergy. We want to see that all of these guys are coming into an area where they could stall. Okay. So let's go to the NASDAQ futures real fast and just get an idea. So the ES futures are again at an area where we could see them, they're almost at all-time highs. So we're just going to say they're probably going to hit all-time highs and they may liquidate above that area. Now, when I come over to the NASDAQ futures, an all-time high in the ES futures would most likely mean that the NASDAQ futures is going to push into the bearish golden prophet. We are quite some distance from the high of the NASDAQ. Matter of fact, we are going right into, now it looks like if I'm maybe wrong here. Let me just make sure. Yeah, I came right there. Okay, there we are. I need to come down just a tad, I think, just to be safe. Let's come down just a little bit. Okay, about right there. All right. So I want you to think about the distance. This is something that technically I taught myself. there's nothing, um, nothing magical about it, but it's just this space within right here and here. I kind of measure it, by just visually looking at it and going, okay, what is that to me? Like that's a half an inch, right? And then I go back over to the ES futures and I go, well, how far are we from the all-time high? All right, check it out. So when I look here, it's about the same distance. So from here to here, it's about the same distance, guys. So if we get towards the all-time high, that means that the NASDAQ futures is going to be at its place where I would actually be looking at trying a short. Now, this morning, I actually tried two shorts that went against me. Too Short. Anybody remember the rapper Too Short? I tried two shorts to get into. Okay. And they both went against me, but I still made my overall, number that I'm always looking for in the micros, because I realized that I was trying to fight the trend. And a lot of times I don't give up, meaning like, the trend was showing us it was more powerful to the upside, and the NASDAQ was really showing us that it still had room to move. It's pushed through the 4-hour inside and up, everybody. All right. What was a supply zone could turn into potential support right there. So our support right now is at 28,763. Let's go ahead and measure this move. And you can see that this level is pretty close to the 23.6. So we have a little bit of confluence there, but we're just going to leave that right there. Okay. So again, I had this distance to work with. And if I were thinking about a short and I'm waiting for confirmation to set up, this is where it's going to be. Okay. This is where it's going to be. And in my brain, and I've done this a million times, I feel like in front of you guys, when we're trading during the day, is that we'll find confluence. This will push here. ES will go to all-time highs. But let's not count out everybody else, right? Like the RTY. Let's see what the Rusty is doing. Okay. Are we in the same predicament, right? Are we close to supply? Like, what's going on here? Can this guy move? Where is the 618? Where's the 88.7? All these things are really important. We're going to go to the high right here. We're going to come down to the low. Guys, we're at the area where I would actually consider shorting RTY. We're at the golden profit level, okay? So this guy's at an area where I think about shorting. NASDAQ is very close to the area where I think about shorting. And the ES futures is still in supply, believe it or not. All right. It's just felt really rough if you didn't jump in this morning. All right. Now let's look at the Dow Jones. Dow Jones is up about 630 points. I don't know if it's moved a whole lot. Like I feel like it was up 600 points hours ago, but I don't know. I don't pay attention a lot of it. But what we can do is come over and take a look at it, and let's see how it's performing from its all-time high and see if indeed this thing really wants to get up there. Here's the all-time high. We're going to come down to the low. Guys, we are very close. Probably remember the little bit of like the inch that I'm showing you that we're away from the 88.7. I'm starting to see a very familiar pattern here. Rom, do you see it? Brennan, anybody see this? The pattern looks about the same. We're about, if we were to actually use a ruler here, right, Bill? If we were to use a ruler here, we would probably come very close to the same distance in which we're looking for prices to potentially turn around. Now, I am not, and I have been saying this for years, I am not a squeeze expert. Okay. I would think, I don't know, but a lot of times what I've noticed about the squeeze is it likes to squeeze, right? When we're getting up towards highs and stuff like that. I've noticed that. All right. And what I do pay attention to is the compression. I've always loved the yellow bars. The yellow bars out of the squeeze are my favorite thing when it comes to supply and demand. Okay. What I find is that when we come into demand or we're creating the inside and up formations, notice the trendy turn signal is confluent with the compression. This is where I pay attention to the squeeze. This is the reason why we call these trendy turn signals. We're looking for prices to start to turn to the upside, okay? All right, on this candle right here on the Dow Jones, we actually have a buy signal, okay? Over the 618, 85% probability, we're going to hit the 88.7. Let's do a little bit of math, okay? Now, ES is really showing off today. It's up like 100 points or whatever. Typically, you'll see on normal business days that will run about 10% of the points. So, for example, if we're running 640 points here, the ES futures, if in, pretty much in line, would be running at 64 points. Okay. But we know that the ES futures are actually doing a lot better than this. Okay. They're doing a lot better than this. But here's the magic. The math from here at 53,284 to 53,426. What is the spread on that? Let's see. Let's look at the calculator. Okay. And these are, just let's round up or whatever. 53,425. Okay. And then minus current price 53,275. It's 150. So the way that I see this is if the Dow can keep moving here, we can still move about 15 points in the ES futures. Okay. I know it's crazy, isn't it? It's just all math and stuff like that. But ES futures, if we can run another 15 points today, are you ready? Let's see where ES is. 76.27. Okay. And we look at the calculator there. We're just going to round up to 76.30 plus 15 equals 76.45. Okay. There's a good chance, in my opinion, if we can hold values here, we could see prices basically pin around 40 to 50 on the ES futures. Okay. That's possible. Now we still have an hour and a half. All right. Big question is, what do you do when you're in? And this is a question for myself, and I've been asking myself this question for many years, and hopefully you've asked yourself this question. What do you do when you get up to these ranges and you feel like we're extended? You don't know if you're going to get your face ripped off. Do you take a chance? Do you take a speculation trade? Do you protect your account? Everybody has like an answer for themselves, right? Positional traders. Some of you guys are just intraday traders. You're in, you're out, you go home, you do whatever you need to do, come back in the morning, make some money, right? I always feel like that's the best thing. I've always wanted to do that. And I never can get myself to just be an intraday trader. Um, every year I say the same thing. I'm just going to come in and trade, futures, SPX and be done. But I always get attracted to the long term trade. I just do. I love it. So I think what you do is you pay attention. And if you have a chart at home and you could take multiple charts and put them next to each other, I would probably go with the 4 hour, the 2 hour, the 1 hour, and the 30 minutes. And I would start paying attention very quickly to the 30-minute chart, that would probably be my first one that I would give a little bit of credit to. Okay. And I'll show you what I'd be looking for. All right. I don't want to fight this trend, right? I don't want to fight this trend, but I want to start paying attention to it on a smaller scale. Because once the EMA clouds start to break down and we have like topping wicks or whatever it is, that's when we start thinking about more of, hey, should I hedge this thing? Right. So, for example, let's go right here. You're going to see that we have this big cloud in place, right? The 30-minute is being like really respected here. You guys see that? 30 minutes looks beautiful, right? Even right there this morning, boom, respected. All right. We haven't even gotten close to breaking under the 9 EMA. I mean, we're kind of close. But one thing I'm starting to notice on a 30-minute, everyone, is we have a topping wick. Topping wicks usually are a sign that the market is trying to put a top in at this very moment. It's not until you break above that we go, okay, I was wrong. All right. Now, this is a bullish trend. And check this out. What do you guys see on the 30-minute chart? What do you guys see on this chart right here? Somebody tell me. A lot of dead shorts, right? People getting run over, maybe? No, but seriously, what do you see here that we teach you? Yep, multiple inside and ups. Multiple inside and ups. So a couple things and extended, Bill. But what we see though, and extended would be my answer to you, Bill, would be extended is perspective, right? But what we can actually see are the inside and up formations, right? These two right here. All right. So what I would do is I would throw on a Fibonacci real quick. And the cool thing about understanding where these are is that now we want to see if there's any confluence with an EMA or possibly like something else. Okay. So we're going to go from the low to the high here and check this out. Now, what do you see? Here's my next question. Now, what do you see? Confluence. Now you see an inside and up formation that is confluent with the 23.6. Now you see an inside and up formation that's confluent with the 38.2. Now you see that every time I teach you that the 23.6 and 38.2, as long as you know where to anchor your Fibonacci's, you can have confluence. And confluence is the best thing, in my opinion, for a trader to have a solid setup. So if price comes back down into this area, this is where I try and get long today. This is a zone, if you will. Adding the 23 and 38.2 right here, this is a solid zone to try and take a long from. Okay. That's one thing that we just realized. Okay. So we're going to come up under here. Now, real fast, coming from the class that Mel and I did, we did the evolution of supply and demand, and there are two different ways to create zones that we taught specifically. And I would tell you, this is more of a modern zone, but the trend is super green. So it's possible that the classic zone, and that's where you use the top of this inside candle, will go bid. All right, so I'm going to put both of these on here for you, and I'm going to label this classic. Okay, so when you're looking for an end of day trade, I want you to do the same thing. I want you to look for your pivots, your inside and ups and so forth. Look at the trend and go, okay, it's an uptrend, so I'd want to buy the dip, right? All right. But if you want to go short, now you have a top that you could use as a stop, if you will. And you have to assess like, hey, is this something I would actually want to go short here and take a stop at 35? You know, that's not bad. It's like 10 points, like 50 bucks, right? On a micros, $500 on the minis. So this is the high. This is where I'd be trying to short to. In order to be a good trader, you know where to get long and you know where to get short all in the same sentence. I promise you. Okay. If you don't know those things, then you're not where you need to be. Before you take a trade, know where you need to get short and where you want to get long. All right. All right. So this is the classic and this is the modern. Now, why did Melissa and I come up with these two things? because the modern zone, okay, reduces risk on average over 30%. Okay, over 30%, which is pretty awesome. Like if I was running a business and you could get something on sale from me for 30% off, I think you would take that deal, right? So all it's saying is that the zone itself is reduced a lot more by using a modern versus a classic. Now, what we found is when using modern zones versus classic, we really love the modern zone, especially if the trend is against us. It tends to come in deeper and then push out. On a classic zone, okay, not as highly probable, but if the trend is really good, it'll actually go bid here before it goes bid here. Okay. So that's one thing. Now, what is the other thing that we're seeing right now at this very moment, Shep? You've been answering these very well. What is the very thing we're seeing right now at this very moment? This is a 30-minute. Yeah, right now. Okay, yep, we got the top and candle mark. So inside and down or inside and up. Jason said it inside and up. It's actually inside and up at this very moment. Now it's a double inside. So let's just watch it. This is an inside and up. This is an inside and down. Okay. Time is the variable. And the thing is that when you're trading on a 30-minute candle, the candle doesn't close until 30 minutes, basically half past the hour at the top of the hour. So I can look down here, it's 1:39. This thing is not closing until 2 o'clock. So I can't really determine whether or not this will be an inside and up or an inside and down. I really can't, not at this moment. But what you can do sometimes if you don't have the patience is you found this pivot and you can use these lines to trade off of and go to a smaller time frame. So for example, if I came over here and I was watching those lines and I had them on this chart, I could use the confirmation process on a 1 minute or a 3 minute and take my trade based off of that. So for example, like right here on a 3 minute, I'm getting an entry, right, with a stop at 7625. And if I was above the inside and up, I would actually take that. See, it's inside and up. I got an entry, 7625 is the stop. Does everybody understand that? Again, I'm using levels from a higher time frame, but I'm executing off the smaller time frame using the confirmation setup. You guys get that? So inside and up, well, if it's inside and up, don't I want to be long? If it's inside and down, I want to be short, right? But 30 minutes is too damn long to wait for some people. So we're going to take this level and we're going to apply methodology to it. Okay. All right. So I'm going to put this up here. What's up, Kevin? What Kevin's doing is he's playing it exactly how he should be playing it. To me, this is where you put in those type of trades, Kevin. And it's easy in my position. It's easy for people to look back and go, "Hey, John was wrong." Do you know what I mean? But if I was right, we'd all sit back and go, "See, it's a lot smarter to buy puts when the market's going up, right?" Kind of crazy. Anyways, that was a nice trade off of that level. If you're using the confirmation process here, you've already made several points to the upside, so not bad. Okay. So that's one thing that we can do. The next thing is I like what Kevin's doing right here, right? So what I mean by that is instead of like being a micromanager, I'm assessing that all of these things that we may have a little bit more room to run to the upside before we hit all-time highs and before all the brothers and sisters hit their resistance levels, right? So that tells me like I don't need to be perfect right here, but maybe I want to take a trade that's like lower risk, high return, just in case we do go down. And I think, Kevin, that's exactly what you're doing here. And I'm not trying to talk any of you guys into buying puts or anything like that. But if I had a choice, if I were to go back when I first started trading, it's so much smarter to buy puts when the market's going up than it is when it's going down. Okay. I always tell you guys, like, buying puts when the market going down tends to be like a huge mistake unless we're having capitulation. And I personally haven't seen capitulation since like COVID. Okay. Capitulation feels a lot different than what we've been through. Okay. All right. Inside and up. So the 30-minute is kind of stretched. What if we take this to a 15-minute? Okay. 30 minutes is kind of down there. Maybe we have like a rule for the rest of the day. We're not going to short this market unless the 15-minute candle starts to close under the 9 EMA. Okay, not the cloud, just the 9 EMA. All right, and here we are. Here's the 9 EMA. Now check this out on the 15. We have confluence right here. The problem is, even if I go short, guys, there's demand right underneath here. There's inside and up formations. Those 30 minutes are very clean right here on a 15-minute move up. Okay, 15-minute inside and up, inside and up. So we love this zone right here, okay? I do. I like this zone, just in case we come down there. So what I did was I bought some call debits in the SPX room, cashed those out for profits, and then I bought the Iron Fly to see if the ES futures was going to settle at 7,600. But guys, we're like so far off from that, 30 points now. So it was a small risk for a nice return, but I tend to like to do those for speculation trades. But I don't think we'll drop down there in the next hour and 15, but you never know. All right. So my summary is this. I think if you wanted to put on a hedge position or a put or something like that, today would actually be, up here on the third day up, would be the day that I try it. But at the same time, I think we've been in a sideways box for a long period of time. And I've learned this by watching other traders too, right? The longer we go sideways, the bigger the breakout. Have you guys heard that before? So when you have something like this, the reason why I think that makes sense is because people have been so sick and tired of waiting in here that they all go crazy when it's time to get out, right? So if I take that box and I duplicate it, I get 100% return of the range that I measured. Okay. So in this case, price could move this far, and that puts me at around 8,000. Okay. If I take you into this here, we are going double inside and up. Did anybody know at this very moment that we had a double inside and up on the monthly? Did anybody? I'm just curious. Did any of you guys know that? Anybody? No, right? We got to get in the habit of going through all the different time frames because this is what slows things down. And Julie had asked, how do we know if we're on the right side? Julie, what's crazy is that it's all relative to you and your time frame. I'm on the right side if I sit here and I say, hey, I'm staying long as the monthly stays double inside and up here. Right. But you might be looking at a 10-minute candle and like, oh my God, it's an inside and down. I'm going short. And then you get run over. And then I'm the person that looks at the monthly and goes, man, why'd you get out of that? Right. So timing is the variable. And it's one of the biggest things that hurts a lot of traders. I am a huge advocate of higher time frames. I think it's fun to come in and make some quick money in the morning, but I believe that the person that pays attention to the higher time frames, a positional trader, someone that's been in the market for a long time, this is where I think the big decisions are made. I was always told that institutions do not live on small time frames, right? We'll see the imbalances and stuff like that, but I was always told if you think they're like sitting around looking at 5-minute charts, then you're wrong, you know? So it makes sense to me because if retail traders are all kind of doing the same thing, then they're all staring at these smaller time frames, hourly, daily. Those are small, right? And then you got institutions looking at monthly and quarterlies, making the big decisions off of these. This is where I think you get an edge in the market. It's pretty cool, right? Anyways, I want to show you guys something. Did I already show you this in the BMA? Did I show you this in the BMA? I had to do this all day yesterday, and this is why my BMA took forever. So I couldn't figure out what the hell was going on all my charts. This is what all my writing looked like. And thank God for AI, man, because it was like, hey, John, do this and do that. First, it said to right click on it and edit properties. Well, if you right click on it, it doesn't give edit properties. So you have to I had to go really slow until this little rectangle would pop up right there. And then I could see edit properties. And then what I found out is that Thinkorswim is not rendering what I was using for font. You guys probably don't have that problem because I picked the weirdest ass font in the world, Mongolian. And if I change it, then all is well. So anyways, this took me probably 2.5 hours yesterday while I was making charts because all my charts have writing on them. And I'd have to move these squares, find these little rectangles, right? So see right there, I just messed that up. It's a little frustrating. But now this is one of those things you might not, if it ever happens to you, which I hope it doesn't, this is how you fix it. Isn't that crazy? Right there. Okay, now I can do it. Boom. There we go. All right. So we are inside and up on the monthly, guys. That's the big picture. And when we were inside and down, there was the idea that we could come down here towards the 9 EMA. All right. So things change rapidly. One of the hardest things I felt like I had to get over for many, many years is realizing that things change so fast. And my mind would be stuck on something. And the timing, the execution timing, and realizing that you need to change course very quickly is one thing that will really help you out as a trader. Now, many of you in here listening to me consider yourself traders. And, I'd probably ask you, and again, this is my own opinion. Some people would probably disagree with me, but that's okay. I'm not here to fight with anybody. But I think that a trader is someone who actively trades, who gets in and out. Like, for example, let's do this together, okay? I need a little bit more participation here. How many trades, if you go to your monitor tab, I want you guys to tell me how many order and order fills have you had today? How many order fills have you guys had today? Somebody tell me. Go to your monitor tab, look up under today's trade activity, and tell me how many order fills. All right, Julie says 7. Chef says I've cut down to 2 to 3 per day. Richie says 5. Stefan, there we go, 22. TLC 4. All right, David, 29. William, 31. Here we go. Now we see we're finding out who the traders are, in my opinion. All right, traders. And that doesn't discount you guys that said 2 to 3. So I don't mean that you don't trade, because some people would say, well, John, I only need 2 to 3 good trades a day. Hell yeah. Yeah, there's absolutely nothing wrong with that. All right. So that's not what I'm saying. But when you get into trading, when I see people like I have, if you click on that, I have 36. I have 36 fills today. And that's a slow day. That's a slow day. Okay. Okay. But this is just trading, Lori. So I think where we have to get our mindset is, Lori, you can have X amount of money allocated or X amount of trades for long-term trades so that you can learn to hold. And then you have X amount of money or X amount of trades that you are day trading. When you try to put all this into one package, it gets very confusing as a trader, right? It's hard to juggle all these things. But I always come into the market understanding how many I have in leaps, how many equity trades I have, how many day trades I'm going to take, and what I'm going to do with my swing trades. So for you all that are trying to practice on long-term trades, you have to say, Lori, you have to say, I'm going to at least hold 2 of these positions for X amount of time. I I've been working with my brother on that. He's like, "Man, if I just would have held this trade, man, I would have made this much money." I used to say that all the time. But how about you do this? Buy 2 contracts, sell 1 where you typically would sell, and on number 2, just keep your stop there. And if you don't get stopped out for the day, you got to make a decision before you go to bed at night. Are you okay going to sleep with it? And if you are, leave it on. You're only going to get better by actually doing, not talking about it, right? So do it. But I promise you this, when you decide to do it, what's going to happen is when you don't take the trades off, the market moves in your favor, right? Or when you do take them off. Sorry. When you take them off, the market goes against you or it keeps going. And you're like, oh, I wish I wouldn't have taken it off. And then finally, you're going to make up your mind and you're going to be like, you know what? I'm going to hold this trade forever. You're going to go home at night. You're going to wake up. It's going to be down 80% the next day. Okay. And you're going to be like, see? And the problem is that you're not giving yourself a sample size. You need to do the same thing for at least 30 days. And at the end of 30 days, go, hey, did that work in my benefit? Or do I just like, I'm not good at doing this, like holding trades, right? You got to try that. My Gemini coach says I need to do better with journaling before putting on more trades, TLC. hmm Yeah, shut. That's true too. That's how they make their money, man. hmm Your credit card says no to prop trading firms. Did you try a bunch of them, Julie? Have you actually tried them? Mm, yeah. Well, listen, you guys can learn how to hold, I promise you. I was telling my brother the other day, I'm like, well, how much did you plan to lose on this? He's like, the whole thing. I'm like, then why'd you sell it? Because it was up, right? Maybe just try buying a Friday expiration on a Monday when it sets up and leaving it alone. Have any of you tried that yet? Probably not. Many of you don't do that, and I get it. You come in, you lost a little bit of money, you don't want to lose again, so you tend to take money a little bit faster. I totally get it. I've dealt with that before as well. Too nervous about geopolitical. So the only thing that can happen, William, okay, maybe you trade with really big money. Like I have no idea. All right. But maybe you're trading with too big of money. Like I don't feel like if you're taking a setup, and if I haven't proved to you, William, that technicals actually work using supply and demand zones, I'd be shocked. They worked really, really well. So, like, what's the worst thing that can happen, man? Is you take a setup, you go home at night, and what? You wake up in the morning and get stopped out? That's the worst thing that can happen, man. Right? So that tells me when people say stuff like that, in my opinion, what you're saying is you're you know you're not accepting the fact that you can lose, right? Now in the day, You can still lose, but you can control that loss, William, right? You can control it. If you go home at night, I understand you cannot control it. But maybe to get like more conviction behind your trades, start smaller. Take the same process, take a smaller trade, and don't close it. Who cares about geopolitical? Geopolitical stuff is only going to push you into supply or demand. That's it. Most likely, let's just talk about calls for a minute. If you're buying calls towards a supply zone after the big moves, and then you wake up in the morning and it's down, the majority of people would say this was a geopolitical thing. It was because the POTUS said this. It's because of this. It's because of that. But technically, it's because you bought after the run into or close to a supply zone. Just like the people that buy puts 3 days ago on the big dip are probably saying, I can't trade this market. The POTUS changes his mind all the time. And this is why this is happening to me. But honestly, you probably bought puts at a demand zone. Okay. That's what happened. I don't think that, and I would love to see if you guys could prove this wrong, but I don't ever think that any of these events, guys, have come outside of a supply and demand zone. Do you know what I'm saying? I think that they are there, and this is me, tons of years of experience here. I think that the zones are there before the events. The events are happening right at or in the zones, and then we're getting the move. For example, all of this information, I don't even know what the POTUS said. I have zero idea. I just saw a couple things on Twitter early this morning. And actually, that was before I guess anything happened because I didn't realize the market was going to move this much. But we came out of the demand zone. My target was 76.12. Sure, I'm off by 17. Actually, it was 76.12 by what? What was it, guys? Target 75.96 by 76.12. So we're like 17 points over 76.12, right? So, I mean, we made it to target. We're happy. We don't have to overthink this. Okay. But William, you said it, man, and there's nothing wrong with that. I'm not making fun of you or anybody in here. But if you're worried about news catalysts, you're either trading with too much money or, as William said, he doesn't like to lose. I would bet that many of you don't like to lose, and that's why you're not hanging on to trades as long as you could. That's why you're getting out too soon. That's why you're moving stops and you're creating a lot of bad habits because you don't like to lose. How many people in here listening to me right now? I mean, be open, be transparent. How many of you in here are losing a lot more of your trades than you're winning? How many of you are losing a lot more of your trades than you're winning? I win a lot more than I lose, right? So you guys, 36 trades I've had. I mean, far as like, I guess, alerts, they're only going to be options or equity. I can't alert the future trades. There's no API, right? But if you take all my future trades plus all the trades that you guys get to see in here, I trade a lot. And the reason why I do that is because I win a lot. That's not a flex, guys. I'm not trying to like throw an ego out there. I'm trying to tell you the process works. The thing that does not work is your lack of conviction. It's you. You're getting in the way of executing. And what happens is, as soon as you start losing, You start trying to find ways to convince yourself of how you're going to be better. It's pretty wild if you really think a little bit deeper about this. You're always in search of something to make you feel better, whether it's a analysis, an indicator, a new trader, a new mentor, a new trading service, it doesn't matter. Every time you mess up, you have this thought that you did something wrong. A lot of times you're not doing anything wrong. A lot of times you're not executing when you should be because you cannot get over the fact that you just lost money. I know because I've been through this before, guys, and I'm not saying I don't get paid to tell you this. It's not like Mandy or anybody from Simpler is coming in and telling me, "Hey, John, thank you for saying that on the mic, man. You made a lot of people happy today. I'm going to give you a bonus." I'm telling you this from experience that my life changed and I started to become profitable when me and my wife sat down and she said, "Believe in yourself, believe in your levels, take the trade, stop talking about it." People trust you, they want to see you execute, teach, execute, proof of concept. That's when I started really believing in myself, when I stopped worrying about losing. It's natural to worry about losing. It is very natural. And I am not perfect. I still come in here and think to myself, okay, what if I were to take 100 contracts here and I lost? I'd feel like the biggest fool ever. Then everybody in the room would be like, man, he blew his account right in front of me. Right. Even though, I'd probably buy 100 contracts at 20 cents. I wouldn't blow my account, but you know what I'm saying. So what we need to do is maybe think of that's the concept that I think about when I go into earnings. So tomorrow, Cat is, let's just make sure we are correct here. I believe Cat is tomorrow and it's in the morning. Good. We could trade AMD tomorrow in the afternoon if we wanted to, but Cat is tomorrow morning and a couple more if you want to look at any in the morning, not in the afternoon. Let's just look at Cat right now. Okay. And when I go into earnings with CAT, I don't think about how much money I can necessarily win. I think about how much money I can lose. Now, I have not been trading cat this year, but I know that it used to be one of my favorites with John Deere. And when I looked at cat this year, I almost like felt like I had a panic attack. I couldn't believe that one of my favorite stocks I didn't trade the entire year. And to think that it moved this much up without me, I was absolutely blown away. So my first thought about cat is it makes me angry because of my disappointment of not paying attention to it. And that can happen easily. You can take a name off your watch list and totally forget about it. So let's look at cat from an earnings perspective, not look at anything the market makers are telling us, but to only concentrate on the things that we learn here. And I can tell right away that I love charts like this, charts that have been going down for a very long period of time, it looks like. One, two, even though I guess this would count as one. One, two, three, and then this is not a down month, but it's just a down trend, right? And I see immediately it is only the 3rd of August, so it's not like that big of a deal, but it came into the lower monthly edge. I notice here we had a wick that looks like it flushed some people out. So what I want to do is I want to go left with this wick, okay? And what you would do on your charts is we're going to take this dollar sign right here, and we're going to find that, and then we're going to click on this line, and we're going to make sure that the left extension is on. The reason why we do this is because when we go to the next time frame, I want you to use this as a basically like a marker to find where price went to. Okay. So I know that this involves these candles here, right? It's an identifier. All right. On the weekly, when I look up and to the left, I already can see that we have an inside and down formation. Okay. I'm going to use the top of this candle because it's a very strong candle. Okay. I don't try to be perfect. I try to come down a little bit before the zone and a little bit behind the zone, just like that. Okay, guys? So we have 883 by 967. Okay, that's about 60 bucks from here. I noticed that it came down the monthly edge again. That's not a big deal to me at the moment. I want to look over here and I want to break down the time frame, go into a daily, and I want to see if there was anything there. Because we have to prove to ourselves that the pullback in a supply and demand room actually came into a demand zone, right? Some very it's it happens. Price will go bid in the middle of nowhere. And that's where someone for me, like me, I won't find any like big zones or anything, and I won't trust it. Okay. Now, in this case, we're going to follow our eyes and go across here, and we're going to look in this area. And I'm going to ask you the question: did we come into a demand zone here? If I take this line and I come across here, would this be a demand zone right here? It is, right? All right. So this is a gap up. And like I said before, if it makes you feel better, you can put your own little candle in here, right? Go like this. Edit properties. I'm going to make this thing green. I don't know, like that. And I'm going to fill it in so that you can see that this is a pretty strong candle, right? So we could come in here. We could do something like this. Boop. Right underneath that candle. And my first thought is we came into a demand zone. All right. Came up underneath this candle right there. Looks pretty good. But the demand zone goes all the way down to 754. I have something to work with here, right? Technically speaking, if you and I are about to get into this trade and we were coming back up here to hit this cloud, there is a potential we could roll over back into this zone. So right here, this is going to be my hedge, if you will. We got very close to coming to the 200 SMA. Okay. If we rolled over, this is where I'd be expecting prices to go. So I already have an idea where I would want to hedge this trade, or sorry, buy puts for this trade. All right. Now, I don't want, make sure everybody understands this. For earnings, I don't want to buy puts in the zone. Can somebody tell me why? Why wouldn't I want to buy puts into the zone? And give me 1 second. I need to grab some water. So you guys think on that. Please give me some answers. Rom is the only one that said, here's Buckeye, move this over just as options would start making money. Yeah, because like, okay, if the market gaps down into here tomorrow and it's a demand zone, most likely what would happen is cat would then bounce right back up. So what would happen to you and me in most cases is we would be super excited, right? But then right before the market opens, it bounced right back up. You're like, damn it, right? Why did it do that, man? I was going to get paid on the puts. Well, guess what? You bought the demand zone. So what I typically do is I would come in a little bit before this. So I would do something like 785 by 780. Okay. Something like that. All right. So we're just going to put a level up here. about right there. And I'm going to try to look for put debit spreads somewhere in this area. Okay. To the upside, I got to think to myself, is this like out of question 880? Not really. This has already been tested. This is a super strong stock for the whole year. Yearly is extremely bullish. But do I want to buy calls for this week? Right? This is a lot further up, I think. Let me see. 830 to 880 is $50. To the downside, right? Let's say 790 by 785, that's about 40 bucks. They're pretty close actually, so not bad. But because it's been in such a slump, I would probably buy the puts for this week. You guys know my rhythm, I hope by now. I buy the puts typically for this week, but on a strong yearly stock, I'm going to buy the calls for a couple more weeks out. But it all depends on the price as well. All right. So we have a good idea here. But the same thing, I would want to be down a little bit, probably like 870 to 880, and down here 790 to 780. Now, we don't need to make them 10 wide. That's pretty expensive for my taste going into earnings. Okay. I want these things to be as cheap as can be. That way, if they don't work out, I'm not crying about it. Okay. But if they do work out, you guys have seen what I've done in the past. I pay for both sides plus some. Okay. So let's come in here and take a look at all products. Just like that. And we're going to put cat on here. And for tomorrow, it's 88%. So let's look at the puts first. Okay. Now I think I said 790 by 780. Yep. Let's do 785 by 780. Okay, and I'm just going to look here with you guys. I froze my screen. Let's look there. All right. Now, most likely, this is going to cost me the difference between these two. Okay. I'm just going to pull this over here. This is only going to cost me $1.35. That's what it's saying, but it's saying $1.35 by 260. So typically I could get in for probably like $1.40, and my return would be 360. Let's just write this down real quick so I don't forget. 785 by 780, about 135, about 140, about 140. Okay. And that would be for this week. Okay. To the upside, we're looking at 870. I'm going to go 2 weeks out to the 18th. No, the 11th. And let's go to 870 by 875. These are $1.63. But $1.63 by 410. 875. Give me 1 second here. 875 by 880, sorry. So they should be a little bit cheaper. All right, these are $1.45. So if I could get this for $1.50, which I don't know, man, these spreads are a little crazy. I'm only spending about $300 on this trade. Okay, 300 bucks on this trade. That's not bad. And the reason why that's not bad to me is because I'll take any trade on a given day and I can lose 300 bucks very easily. So this falls into the category of it allows me time for the calls. If it flushes, I get paid. And really the big point is if it flushes or goes straight up, will I make more than 300 bucks? You see what I'm saying? So I need to pay for one of the sides, and if I get lucky, the other side will pay me too. It's actually been a while since we've been paid on both sides. meaning I make so much money on one, that's a bonus. We've done that several times, but I've had trades in the past where I'm making it on one side, I buy back the short side of the other, and then it goes all the way back up or all the way back down. I get paid all over the place. It's just like the best trade in the world. It's not a guarantee. Okay. So on this trade, let me see if I can get in. I'm gonna try this call for $1.50 just to see if it's gonna work. It's hard to say. Let's see. So see for $1.50, it's not letting me in at the moment. Let's look at the put side. I said put debit spread 785 by 780. Oh, one thing I checked right at the end is what the market makers say. So Trendy is saying anywhere from 40 to 50 bucks. Okay. That's what Trendy's saying, right? On the analyze tab, I'm going to click in, I'm going to put cat in, and yeah, we'll do Palantir as well. It's telling me 54. So we're right where we need to be, right? 54. Now, most people would probably look at my analysis and go, man, we should sell some iron condors. And I agree. Like, technically speaking, me and the market are right where we need to be. The market makers, like, we're on the same page. But I do not like selling iron condors on a Monday or on a Tuesday with the market on fire, right? And things are looking really good, or maybe we even hit a supply zone and break down a lot. I'm just not willing to do it because I most likely would lose more than $300. Okay. So I'd rather just buy what I was talking about. So let's look at the put debit spreads I talked about, 785. $785 to 780. Now, see, in my head, guys, this is just a trade, right? It's not about I don't know what's going to happen. I do know what's going to happen. Can somebody tell me what's going to happen? What can happen? What's going to happen? Yep, lose my risk. Exactly right. I'm going to lose my risk. Okay? I'm going to lose this money if it doesn't work out. That's the only thing I care about. How much money will I lose? Is it going to break me? If I lose on these puts, will I be able to function tomorrow? Will I be able to take a PMZ trade? You see what I'm saying? You know, honestly, guys, I might actually go a little bit further out and go to like 18 days out and try for 900s. That's like really lottoing it, huh? Give me 1 second here. Could also sell put credit spreads, but I don't want to do that in their earnings. The problem with going too far out, guys, is if it's only 5 wide, they're not going to give you a lot of your return because they know that they got a long time for you to be wrong. The only way that I'm going to make all my money on a tight call like that is if it busts through like 50 or 100 bucks. You know what I mean? So you really have to be right, is what I'm trying to say. go. All right, cool. I'm 1 week out there. This is also an earnings trade. All right. So that's what we got there. All right, so that is CAT. Now let me go into, I think you guys said Palantir, right? Let's come over here and take a look. Yep, that's this afternoon. I actually have a position of Palantir in my grandkids account. This one should be interesting. Let's see. CAPLTR. We came into, well, I guess we came into a zone that I was looking at a long time ago. It's not much of a zone. It must have been a weekly or something. Let's see. Yeah, right here. And then I combine this one. Okay. I'm going to take this off though. Go to the weekly. Man, this is an ugly chart. I mean, this is the kind of chart that I would probably sell Iron Condor on and get run over. But I don't feel like it goes over 135. If it does, that's awesome. And I think we hold 116. So my first thought is if you want to buy debit spreads, this is where I'd buy them. I don't know if they would pay. And if you want to sell an Iron Condor, this is probably where I would sell it. And the funny thing is when I have this kind of thought, this is where I'm wrong. And this is where, the market teaches you a lesson. It's like, oh, it's sideways. The stock's been shit for a very long period of time. I'm just going to put an Iron Condor on it. And then this thing flies all the way up to, if we put some fibs on this thing, let's look. Go to the high, go down to the low. Yeah, I mean, what if this thing flies to 155? You know, um, gets back to it has not since we made a low. It's never returned to the bearish golden pocket. It's never been there, right? Because the lower you go, it's a different level, right? Yeah, yeah, exactly. So right here, this is possible right in here. Let me just look at if I were to price these. I feel like that's really tight. Only 10 to the upside. Actually, I'm coming up with 10 to the upside, 9 to 10, and 9 to 10 to the downside. Now let me see what the market maker said on this. So analyze, let me look, PLTR, and they're saying 13. So mine are a little bit tighter than what they're saying. And their implied vol on this. So basically the premium is 141%. And I could tell by just looking at the option prices that almost everything costs the same, so like if I buy a 130 and sell the 135, it costs $1.75. It's not bad, right? You can make $325 if they crush through the top line. And if I were to buy the 120 by 115, you're going to pay $1.80. So these are a little bit more expensive, obviously, because of implied vol. They're more expensive than the ones I just did, but the returns are still about $300 for 160, 170 bucks. So if you guys like the ideas, I I don't like this name. I just don't like it anymore. I'll probably like it if they break all the way up to 155. That would be fun. If these guys actually pushed up towards the golden pocket just on a huge beat, the 150s are only 120 bucks. And they have the most actually, guys, it's kind of weird, it's just looking at the numbers. If you look at the all products over here and look at PLTR, the option chain, check this out. So if we come right here, look at all the volume that's on the 150s by 155s now. I don't know if they're selling these or somebody big is buying these. I really don't know. I have no clue. But look at this. I find this interesting. 130 all the way down to 150. We got 24,000 there and 25,000 here. I mean, maybe someone's buying call debits. If you guys are better than me at looking at these things, you could give your insight, but that's a 20-point spread. It's a lot of money to be made there, but also expensive. 6 by, yeah, you'd be paying about 500 bucks for those, but for an opportunity to make up to 1,500 bucks a contract, that'd be a huge beat. And I'd be really happy, for the shares that I have, but also be happy for anybody that's long the name. But I'm hesitant to say that I'd buy debit spreads on this. I don't know. I'm just having a hard time with it. I don't know why. Maybe my brain's messed up with Palantir, but those are the numbers. So if you like the trade, these are the levels I'm looking for, guys. So I would say 120 by 115 down here. And then up here, I'm just going 5 before it. Text 130. Now, if you want something fun and you think these guys are going to actually push to the upside, I would buy more time, like 21 August, and shoot for, 150 by 155 if you think they can do that. And those are only 59 cents. That's fun. 60 cents for these. And actually, I don't mind actually taking that shot. So I'm gonna try that. Yeah, I'm gonna take that shot. There we go. Way out of the money. I don't think they could do it. This would be a super lotto. I would say lotto, 130 by 135, more realistic. Like this. And BDS, put debit spread. Okay. Trust your gut. Go, Lori. All right. And look at that, man. I totally forgot that Mel was coming in here. So sorry about that, Mel. I literally forgot, damn it. And you could have just kicked me off of here. Let's go PL. I'm gonna make a note on this. PLTR. Okay. There we go. All right, cool. All right, so we got those out of the way. The market's smoking here at 76.35, up 116 points. The question is, can this thing actually make it to 76.50 by the close? This would be interesting. So definitely would be interesting. Who else is reporting tonight? Anybody else? Man, everybody's jumping on Nvidia in the MTT room. That's good. Love to hear it. AMD I'm going to do tomorrow, Julie. Yeah, and RDW is on Wednesday. I'm gonna do AMD tomorrow just because we don't really need to get into the trade yet. I don't even have to get into it, but I'm gonna look at it tomorrow just in case we get a big gap up again. Then I'll buy the puts and then, but we'll see. It needs to have a good risk to reward. Hey, Summy. Hi, buddy. You're a big dog. You're huge. Man, it's gonna get me. What we're at 237. No way this thing get well. Today is the 3rd. Let me see something on SPX. Ay, ay, ay. They're gonna pin 7,600. It seems like on SPX. Definitely seems that way. Or 7,605. 7610 has 156,000 on the volume here. So anyways, we'll watch earnings. Well, I won't watch them that closely, but I'll look at Palantir and stuff later on tonight and tomorrow Caterpillar. So that might be fun, guys. We'll have fun, and then tomorrow we'll put on a trade idea for AMD. Okay, remember it's just a trade, right? It's just a trade, guys. Conviction at your levels. Just know what your risk is and execute those bad boys. If you made money this morning, we'll do it again tomorrow. If you didn't make money, we'll try again tomorrow. If you had a hard time executing, that's okay. I feel like we talked about it enough. I think you'll execute tomorrow, whether you win or lose, but you'll get better and better. It'll just make you a stronger trader by being able to execute. So I appreciate your time. It's been an amazing Monday back. We got Mel back, very happy and ready to rock and roll. So see you in the morning.